Welcome back, accounting students. This is Mrs. Bloomquist, and we are up to lesson 3 in chapter 2. Remember, in chapter 2, we are analyzing transactions into their debit and credit parts. And previously to watching this video, you have created for yourself some kind of note to help you remember within the accounting equation on which side of the equation debits are increasing and which side of the equation debits are decreasing, and the same thing with credits, so that you're feeling more comfortable. I would encourage you to get that note out just as a reminder as we're walking through this unit. The objective of this particular lesson is to analyze transactions for operating a business into the debit and credit parts. And you just want to make sure that we are now going to be looking at owner's equity. Okay, so as we're thinking about cash from sales, remember that sales are revenue and that's money coming into the business. So let's say we receive cash from sales of $1,100. As we think about the T account here, we have the cash account that's going to be impacted, and we have our sales account. And we're going to classify cash as an asset, and then we're going to go ahead and classify our sales in our owner's equity. As we look at what this equation looks like, we can see that we receive cash from sales, so we're going to increase or debit cash. And you can see that because we're looking at sales, the normal balance for sales is on the credit side, so credit is going to increase sales, so we're going to debit cash, which results in an increase, and we're going to credit sales, which results in an increase. Okay, so now we're going to think about another transaction. We're going to be selling services on account. First question I'm going to ask you, if we sell services on account, has any cash changed hands? You should be able to think through. This is on account. So we sold some services to Main Street, and you can see that I am not touching cash at all. No cash has changed hands with this transaction. I now have an account receivable for Main Street services. Accounts receivable are classified as assets, so an increase in accounts receivable is a debit. Sales, again, still under owner's equity, and sales are going to be increasing on the credit side. So a credit to sales results in an increase. Okay, now I've paid cash for an expense. So as I'm thinking through what actually happens in my business, cash came out of my account and I'm using it for an expense. So I'm paying my communications bill for cell phone and internet for $80. I wish I could ever find something that I could do for just $80 for a cell phone. As I look at my assets, cash is an asset account. Cash is decreasing, so I'm going to credit cash. And then now I have to factor in that as I'm looking at an expense account in owner's equity, that my debit is going to decrease my owner's equity, but my communications expense account, now that particular account, I need to report an increase in the expense. So as I report the increase in a communications expense, it results in a decrease of owner's equity. This can sometimes be confusing for students, and you would want to look on page 45 if you wanted to see about the bigger example. We understand expenses decrease owner's equity, and we could go ahead and put that all right under that owner's equity account, except that we need to be able to track all of our different expenses, and being able to do that means we need to have these different expense accounts that we can go ahead and track. So we're using communications expense for these cell phone charges. And because the owner's capital account has a normal credit balance, decreases are shown as debits. Therefore, the expense account has a normal debit balance, and because expenses decrease owner's equity, increases in expenses are recorded as debits. So that's why you're seeing, okay, normally the debit side decreases right here, but for communication expense, in order to accurately reflect the fact that our communication expense went up, it's the debit side that increases the balance that results in a decrease in owner's equity. Okay. All right, so now we've received cash on account. Main Street Services decided to pay us some money from some of the previously purchased sales things that we did with them. So what we're looking at is that $200 was received. I'm going to debit my cash to increase my cash, and I'm going to go ahead and credit accounts receivable because I need to decrease my accounts receivable for Main Street Services. This should make sense to us because all of the transaction happened on the asset side of the equation. So my increase and decrease should net out and keep my accounting equation in balance. Okay, cash is paid to the owner for personal use. We're withdrawing equity in the form of cash. And again, I'm going to direct you into page 47 in your book so that you can see cash has decreased. So I'm going to go ahead and credit cash. Now I need to think through what exactly is happening with owner's equity. Total owner's equity is decreasing, so it's going to be a debit. However, the Michael Delgado drawing account, a debit increases that drawing account to reflect that the amount of money the owner has taken out of the business is going up, and the increase in the drawing account means that owner's equity is decreasing. So debiting the drawing account increases the balance in the drawing account. The drawing account increasing in value results in a decrease in owner's equity, and so that's why that's a debit. I'm going to go ahead and credit cash. I'm going to debit the drawing account, which results in a decrease in owner's equity. Some of those activities that impact owner's equity can be a little bit confusing, and so sometimes we have to think about what is going on in the account and what is going on to owner's equity to be able to really analyze those. All right, so as we think through what two accounts are affected when a business pays cash for a cell phone bill, well, the two accounts I know that are going to be impacted are an expense account and the cash account. Okay. Two accounts that are affected when a business sells their service on account. Now, I'm selling something on account. Has any cash changed hands? And the answer to that should be pretty clear by now, I hope. I'm selling services on account, so now I have an accounts receivable, and I also have sales. The two accounts that are affected when a business receives cash on account, so now I'm actually getting the cash in. I'm going to go ahead and increase cash and decrease my accounts receivable. Is the drawing account increased on the debit side, or is the drawing account increased on the credit side? And if you're having trouble remembering that, go ahead and look at the chart on page 47 to look at what's happening with the drawing account. A debit is where you would increase withdrawals because withdrawals decrease owner's equity. So the debit increases on the drawing account because the debit actually decreases owner's equity. So you just always want to be thinking about how does that transaction impacting the accounting equation. Are revenue accounts increased on the debit side or the credit side? So revenue accounts, where do we put revenue accounts? Are they on the left side of the accounting equation or the right side of the accounting equation? And once we know where they are in the accounting equation, we can easily identify that revenue accounts are increased on the credit side because revenue increases owner's equity. All right, so from here, you should go ahead and do the work together for 2-3 and the on your own for 2-3. Something that you would want to be thinking about in terms of how to extend this information would be, what would be some additional ways a business could increase revenue besides sales? So what can a business do to go ahead and make the revenue go up that are not specifically tied to sales? And then what are the kinds of things that a business owner can do if expenses exceed revenue? So what if your expenses are greater than revenue? What are the kinds of things a business owner could do? You'll want to put your best thinking caps on because those are some really important questions. From here, again, head on out to Applia. Make sure you complete the form for the major concepts under lesson 2-3 and see me if you have any questions. Thank you. Good luck.